Hey folks, Dan Frio here with your real estate news for this March 3rd, 2026. So today what we're going to do is we're going to follow the money. We're going to be like the FBI. We're going to follow the money. Where are investors putting their money? Well, they're not putting it in the stock market because we have the Dow Jones down almost 900 points. Well, they're not putting it in the bond market. You've got bond prices down 35 ticks. It means mortgage rates are going to jump again today. So where are investors putting their money? Well, that's what we're going to talk about in today's show, folks. So my name is Dan Frio. I'm actually a federally licensed mortgage loan officer. And if you need help with a mortgage, I'd love to help you. I'll give you all my information at the end of this video. You're here for these. So let's get to it. So yesterday we had mortgage rates jump an 1/8% in one day. That's a big move. Well, unfortunately today we're probably going to see the same thing. So if you're a homeowner, home buyer, pay attention. I might have some good news for you and maybe some advice for you and maybe free calculators to give you down below. But let's get over to the news so I can help explain to you guys, should you lock in or where are these things going to go from here? So the first thing we want to look at is the stock market. And the stock market's getting hammered. And this is usually what happens when you have conflict in the Middle East or conflict anywhere else throughout the world. What investors will do, they're like, okay, I'm getting out of the stocks. They're risky. And I'm going to put my money in the safe havens. Those are usually bonds. Well, the unfortunate part about that, they're not doing that right now. So here's what we follow on my channel. So I'm a loan officer, so I follow this bond right through here. It's a mortgage bond. All you have to understand is that number up through there, if it's red, that's bad. The bigger the number, the worse it is. So a tick of minus 34, we're going to probably see mortgage rates jump to about 6.25 today, the high end of my range. I've been expecting mortgage rates for this quarter to range from 6.25 to 5.875. We've been dropping down there. We were at 5.9 the other day. We had about 170 people trigger on our RateWatch. I'll get to that in a second. But so now what's going to happen? So let's get over to it, and I can explain to you guys what most likely is going to happen to rates, the stock market, and the whys behind it. So the first thing we want to look at is, let's get over to here. We know there's conflict in the Middle East, and that's what's creating all these headaches. But I want to show you the fundamentals behind the scenes so we can look at that and then take some direction from there and then add the Middle East conflict with this, and then I'll give you my direction on where I think that the markets are going to go from here. So here's what we got yesterday, and this kind of snuck under the radar. The first thing we got on was a whole bunch of manufacturing numbers yesterday. We got manufacturing PMI that was at 51, stayed at 51. We got the employment numbers at 48, stayed at 48. But you go down through here, this is manufacturing prices. I've been saying we're going to have a January effect, meaning inflation in the first quarter this year is going to go up. And there's for a lot of things. But this is a bigger number than I thought. So this is telling us manufacturing prices, it went from 59. It was supposed to uptick to about 60. It went to 70. That's what freaked out the markets yesterday initially, when the markets just plummeted out of the gate. Then it got some good news throughout the day, well, whatever good news there was, and that kind of skewed the markets, and they ended up some in the green, some in the red. But this is a big number that we missed yesterday, and this is inflation numbers telling us inflation, it's coming up, and it's coming up pretty high. So then today what we're having is a couple Fed officials talking, and they're probably going to be dwarfed by the Iranian conflict, that news. So let's get over to Wednesday, Thursday, and Friday. I'm going to give you other pieces of the puzzle that's going to affect what the Federal Reserve does, because the Federal Reserve is going to meet in 2 weeks. So let's look at this data. Then I'll give you my insight on what the war is going to do, and then we'll conclude with, should you lock in, should you float, where I think mortgage rates are going to go from here. So let's look at this. Wednesday, we're going to get some jobs numbers from ADP. Now, I hate their numbers, but let's just look at what they have. They're saying last reading, there was 22,000 new jobs created. This time there was going to be 50,000. That's a huge move. So that's telling us the job market, pretty good. Okay, you go down through here, other numbers through here. Then we got on Thursday, we got import prices, initial jobless claims, and continued claims. That's going to tell us again how robust the jobs market is. Then we're going to start getting numbers through here, core retail sales, average earnings. There's a whole slew of information coming out this week, but this is going to be dwarfed by the Middle East conflict. But we want to focus in on this because if the conflict is short-lived, a lot of money is going to be moving back into something. What is it? Stocks or bonds? And that's what we're focused in on. Remember, we're focused in on following the money. So based on all this news, what am I expecting is going to happen maybe between the Federal Reserve? Are they going to cut rates? What's the stock market going to do? What's the bond market going to do? Well, let's get over to this. The Federal Reserve, here's what they monitor. They monitor the PCE, that's inflation. You and I usually look at the CPI, consumer inflation. But this number, they want at 2. It's at 2.9 and keeps going up. So they're like, okay, we can't cut because inflation's almost 3, went at 2. The jobs number, the unemployment rate, it was 4.6, then 4.4, now it's at 4.3. Wages are going up, they're beating inflation. I know you might not feel that way, but we have a good jobs market, wage growth, and then basically inflation kind of getting a little out of control. Is this stagflation? We don't want that. Google stagflation on what that means. So now let's get over to what the Federal Reserve's most likely going to do in 15 days. They're not going to cut. Okay, then I can prove it to you down through here. The probabilities of a rate cut in the next few meetings, it's not there. 90%, this could be 100%. 100% chance they're not going to cut at the next meeting. There's an 85% chance they're not going to cut at the meeting after that, and then we'll be data dependent after that. But look, there doesn't look like any really maybe one rate cut this year. So even though the Fed cuts or doesn't cut, doesn't really mean that's what's going to happen with mortgage rates. So let's go back up to the front of this. Mortgage rates, they were up 1/8% yesterday. They're probably going to go up 1/8% again today because of the bond market's getting killed. So the money is going where? Well, that's what we started with this. So the money's not going to the stock market. The money's not going to the bond market. People are buying oil, but you can only put so much money into that. I think people are just holding cash. And here's why. This conflict, we've seen this play out a few times, and it's usually short-lived. Okay, so I think that people are just taking their money off the table and just holding it. They're going to hold it and hold it. And that's why you see these huge spikes in the market. And you're going to probably see it once again. I think people are just sitting on the sidelines because the fundamentals right now, if you look at it on the economic news, we have inflation ticking up, but we have corporate earnings coming in good. We have jobs pretty good, darn good. We have wage growth good, and we have basically a lot of economic news that isn't so bad. So once the conflict ends, most likely people are going to jump back into the market, and that's my expectations with this. Because if you look at it, if you had $1 million to invest, and you're not investing in the stock market, you're not investing in the bond market, where are you putting your money? You're sure is not putting it into crypto. So where is it most likely? It's most likely sitting in the cash. So there's going to be another swing when all this ends. So please do me a favor. Don't sell your stocks here. Don't freak out. And if you need help with a mortgage, let's say, okay, Dan, I was waiting for mortgage rates to get even lower. Where are they going to go from here? Well, let me give you some help with that. Let's get over to this. I used to come up with a thing that each day would say, should you lock in or should you float? Well, here's some guidance for you. If you're a homeowner right now, let me give you a tool. You can go to our website, the rate update, and we have a tool right up through there. It's called RateWatch 2.1. Put your mortgage information in there. And I want 2 more pieces of information. What rate would you like to refinance? And we'll call you, text you, and email you when that rate hits there. We'll go over the payment, the fees, and your break-even point. But also, how much of a monthly payment would you like to save? So let's say, Dan, I want to save $300 a month. We'll put it in there. When your savings goes to $300 a month, I'll call you, text you, email you. We don't sell the data. But wonder if you already had a quote and you want me to review it. Well, I just created that thing too. It's called Loan Estimate Review. Upload your loan estimate. I'm going to ask you one thing. If I can beat the competition on rates and fees, I'm hoping to win you as a client. So let's get over to who I am and what I do, just so you understand the basics on all this. And then if you're a homeowner right now, I would suggest locking in or looking to refinance. If you're a home buyer, builder, looking down the pike, where rates going to go from here, I'm still going to stick with my predictions. I'm saying rates are going to be between 6.25% and 5.875. We're probably going to test that 6.25 today because of the bond market. It's down another 34 ticks. So the bonds down 34 ticks. We got the stock market down 900. Folks, the money's sitting on the sidelines because nothing else is working. You can go to crypto, and I can almost assure you crypto's down as well. So the money's coming off the table right now, going into cash most likely. So as soon as this conflict kind of comes to a resolution, you're going to probably see all this stuff come back. So don't sell here. Don't panic. If you're a homeowner, reach out to us. We'd love to help you maybe navigate home ownership, getting you pre-approved, or maybe looking at some of the numbers on does refinancing make sense? We can help you with both of those. So folks, my name is Dan Frio. I've been doing this for over 35 years. I'd love to help you out. So go to therateupdate.com. We have a whole bunch of tools here and subscribe over there. Do you realize I have over 7,000 videos? Yeah, I created 7,000 videos in my career. There's probably something down there that tickles your fancy. So thanks for watching. I'll be back here tomorrow unless there is some huge breaking news. But I'll be back tomorrow to explain to you guys what's most likely going to happen with these and the whys behind it. But don't be surprised if I come in tomorrow and rates are 6.25 on my high end. So thanks for watching. Please give me a thumbs up if you don't mind, and subscribe over there if you don't mind. I'm trying to hit 50,000 subscribers by June, and only you can help me. So thanks for watching. God bless. Have a fantastic day. See you tomorrow. Bye-bye.